Good afternoon, everyone. Welcome to another installment to the TCBA webinar series where we provide a platform for one or two speakers to talk about the current topic of interest over the next 60 minutes. Today's topic is no doubt popular and a trendy one. This will be our second webinar of 2022. We are live virtually via Zoom in Toronto, Canada, with two brilliant speakers who I will introduce to you shortly. Before I move on to the formal introductions, let me introduce myself. I'm Gilbert Wong, TCBA Third Vice President and Moderator for the first session. A primer on cryptocurrencies with David Ma. The second half of the virtual webinar will be on NFT, specifically music NFT with Hanjin, pre-recorded live from Hong Kong, China. TCBA Director Annie Chan will be the co-moderator for the second session and will conduct the session with Hanjin in Cantonese. After David and Hanjin speak, David will answer a few questions you may have. David has graciously agreed to stay an extra 15 to 20 minutes after Hanjin finishes for a Q&A session. I kindly ask that you save all the questions until the end. Before we start, let me get the disclaimer out of the way.
The presentations in this seminar or webinar are intended for educational or entertainment purposes only and do not constitute or replace independent professional advice or judgment. Participants should seek and obtain their own independent professional, legal, financial, or other professional advice before taking any action based on what is presented. Without limitation, anything presented, including all representations, expressions, statements of facts, or opinions given during the presentation are those of an individual participant making such during the presentation, and unless expressly stated by Toronto Chinese Business Association, its co-sponsors, or its committees to the contrary, are not also made by, endorsed by, or represent the opinion or position of Toronto Chinese Business Association, its co-sponsors, or its committees. Toronto Chinese Business Association does not endorse or approve the content, accuracy, and completeness of the information presented and assumes no legal or other responsibilities for same. Attendees should note that sessions are recorded and may be published in various media, including printing, audio, and video formats without further notice. By attending all or any part of the webinar or seminar, all participants and attendees give consent to such use of the recording and waive any and all right or claim for privacy related to or compensation for their attendance or appearance in the recording.
Without further ado, let me introduce the first speaker. David is a partner at Blaney McMurtry who has advised clients ranging from startups to multinationals for over 20 years on a broad range of technology transactions, including those involving cryptocurrencies. He has been recognized in Best Lawyers in Canada, Lexpert, and Who's Who Legal in the areas of fintech, computer, and information technology law. Mr. David Ma.
Thank you very much, Gilbert. Just give me 1 second here while I fire up this slideshow. Wonderful, wonderful. So why don't we get going then? So this is my very brief primer on cryptocurrencies. I'll give everybody on this webinar a bit of a caveat. I've done presentations, overviews of cryptocurrency that have lasted for 8 hours. And what I've tried to do is severely compress one of those very lengthy presentations into 20 minutes. So please forgive me in advance if things are a little bit superficial and perhaps somewhat compressed. So without further ado, let me first start off by providing a bit of an overview of the next 20 minutes. Basically, what I'll be going into is firstly, a very brief overview of the elements of cryptocurrency and how it works. And then some pros and cons as compared to more traditional currencies like US dollars, Canadian dollars, Japanese yen, things like that. Variations, I'll try and touch very briefly on different types of cryptocurrency and how they operate. And then a few minutes on how cryptocurrency technology can be applied and do other things above and beyond serving as a currency or method of payment. And then lastly, time permitting, I'll go briefly through some legal implications of using cryptocurrency. So what I've tried to do is come up with a very concise and hopefully accurate description of what exactly a cryptocurrency is. And you can see it up there on the screen. a decentralized electronic ledger used to exchange value that is secured using cryptography. Well, what exactly does that mean? Let's try and break it down a little bit further. So for the purposes of this presentation, I'll be using Bitcoin as an example. So there are, of course, variations. There's any number of different cryptocurrencies out there, but most of these elements will apply across all cryptocurrencies. That being said, let's break down the definition a little bit more. Ledger, I think that's a pretty straightforward concept. It's similar to and no different than any other ledger or book of record, like a paper-based accounting book, a spreadsheet, a database. And essentially, all it is a store of records of transactions and balances, and that's it. Decentralized basically refers to the fact that when it comes to cryptocurrency, there are many copies of the ledger that are held around the world by many, many different people, all of which are synchronized. In other words, there's no single person controlling a single copy of the ledger. And in contrast, for example, a bank account, you only have one copy held by the bank and controlled by the bank. So it's quite a bit different than traditional ledgers for traditional currencies. Digital, I don't think, requires much of an explanation. Ledgers for cryptocurrencies are in electronic form only. And by exchange of value, essentially what I'm referring to there is the transfer of some or all of the balance recorded on that ledger from one person to another, or perhaps more accurately, from one specific address in that ledger to another address. And that's it. It's a transfer of a number. That's all there is. The last element of cryptography is where things start to get a little bit more complicated. Cryptography as a topic, you could spend 4 years doing a degree in cryptography, but I'll try and boil it down to some essential elements, the very, very basic elements that I think are needed to understand how a cryptocurrency works. And just I guess a brief moment to define what cryptography is. It's basically the study of secure communications. In other words, it's the study of how to keep data confidential and how to verify its integrity and authenticity using mathematical algorithms. And so I'll touch upon 3 specific elements when it comes to cryptography: cryptographic hash, public key cryptography, and the role of cryptographic signatures in public key cryptography. And so this is an example of a cryptographic hash function. Basically, the purpose of a cryptographic hash is to provide some assurances with respect to the integrity of a message or transaction. It's basically a mathematical algorithm that maps data in a message or transaction to a fixed size string called a hash. And what happens is if that data is changed, if that message or the transaction is changed, then the hash number will change as well. And this is illustrated by the slide that you see in front of you. So the blue boxes represent the message, and that could equally represent a cryptocurrency transaction. The blue box represents the content of the message or transaction that you want to send. And then the pink boxes on the right-hand side represent the hash. And as you go down row by row, you'll notice that for very, very minor changes in the message, there'll be a very significant change in the hash. And accordingly, the hash is a way to ensure that whatever message you're receiving is in fact the original message, because if it's been changed, then of course the hash number will change as well. Public key cryptography is basically a system that uses 2 keys in order to do any number of things. So there's 2 keys involved: the public key that can be published widely, and a private key that's known only to the owner. each set of public and private keys are unique, and a given public key will only function with one and only one private key. You can use these keys in a process known as cryptographic signing. And that's basically a mathematical model of allowing somebody to verify the authenticity of a message or transaction. And it's used in conjunction with that hash function that I described in the previous slide. So you take a private key, calculate a hash, and use your private key to sign that message and then send it off to somebody. And the recipient can then take your public key, which can be publicly disclosed, to verify that it in fact originated and was signed by your private key. So let's go back to the ledger for a second. All of these cryptographic principles come together to some extent in that ledger. And here I use the title blockchain, but that really refers to, it's still the ledger we're talking about, but the blockchain refers to the form that ledger takes. And there's a specific reason why it's called a blockchain, which we'll get to in a moment. So the way the ledger works in cryptocurrency is, firstly, transactions are cryptographically signed by individuals or organizations who want to send Bitcoin to somebody else, right? So you compile a bunch of transactions and you put them each into a collection known as a block. And the cryptographic hash is generated. And you recall the purpose of that hash is to make sure that those records remain unaltered. It preserves the integrity of the data. And the very interesting concept that's used in this particular structure is that the hash from a given block will be included into the subsequent block. And that subsequent block's hash will be included into the next block, and so on and so forth, thus resulting in a chain of blocks of transactions, and hence the term blockchain. And that helps to preserve the integrity of the records in question. It makes it very difficult to alter them, as I'll explain a few slides later. So a bunch of other elements involved in cryptocurrencies. First of all, a digital wallet. And unfortunately, the name's a bit of a misnomer. A digital wallet is essentially software on your computer or smartphone that enables you to send, receive, or store Bitcoins. But it doesn't actually hold currency like a physical wallet. It's more akin to a bank account number, except that instead of pointing to the bank's records on your particular account and how much money you have in it, it points to a record on the blockchain, on the ledger, that shows how many Bitcoin or Ether or what have you that you hold. And wallets will include two elements, a public key and a private key, as I had described earlier. And very similar to that previous example, the public key is meant to be disclosed to anybody and everybody. There's no risk associated with publishing that public key. And really the purpose of that public key, or in the case of Bitcoin, you call it a Bitcoin address, they're used to send people funds. And I've given you an example of what a public key looks like in that second line there, that long string of numbers. That's actually a real live public key from a real live Bitcoin wallet. So if you'd like to try it, by all means do so, and I'll let you know if it works when I get your Bitcoin. The second element of a digital wallet is a private key, which, as the name suggests, must be kept secret. The private key is what's used to send funds by cryptographically signing a transaction record showing that a specified number of the cryptocurrency has moved from your address to somebody else's. And the reason why it needs to be kept secret is because if you give somebody else your private key, then they'll have the very same access as you do to your cryptocurrency holdings, and they could spend them, they could do whatever they want, just the same as you could. Nodes are basically computers that store a copy of the entire ledger, the entire blockchain. And going back to that decentralized nature that I mentioned earlier, and because each of these nodes, each of these computers holds a full copy, it gives the system some robustness. It doesn't matter if a few nodes fail. So just as a simple example, currently in the Bitcoin network, there's probably in the neighborhood of 15,000 nodes. So literally thousands could fail, and yet the ledger would still continue to be up and running. And each of these nodes serves two purposes. The first one being that they check each of these blocks that's added to the blockchain to make sure that they conform to the rules of the relevant cryptocurrency. And then secondly, they're used to transmit new or historical blocks to other nodes so that they're all synchronized. They're all in agreement with each other. Again, to enhance the integrity of the ledger. Then lastly, there's miners. So miners are special nodes that compete to verify new transactions in blocks and add them to the blockchain. And in order to do that, at least for Bitcoin anyways, they solve a cryptographic puzzle, which requires a fair amount of computing power, pretty significant amount actually. And it's basically whoever finishes first. The first one to solve that puzzle wins the right to add the block to the blockchain, to the ledger. And in consideration for all that effort they put in, they're issued more Bitcoin. So they do make money off of it. And this is pretty fundamental, at least when it comes to Bitcoin, because this mechanism of solving a cryptographic puzzle helps to maintain the integrity of the blockchain. Because in order to alter a transaction, or at least try and alter a transaction, past transaction, you need to solve the cryptographic puzzle of the block it was in. Not only that, but you recall the nature of the blockchain is that they're all chained together through these hash numbers. So not only do you have to solve the cryptographic puzzle for that particular block that you're trying to change, but every single block that comes after that. And that requires an enormous amount of computing power. Makes it a very expensive proposition, therefore very unlikely that somebody would try and alter a transaction record. This slide, I'll probably skip through. I think we've already touched upon certain elements, but it basically walks through the entire process of how Bitcoin transaction is processed, how it's mined, how it's initiated, and the entire thing. So I think it's pretty straightforward. So I'll leave all of you to take a look at it in your leisure and to understand the details. So, advantages. Why is everybody so keen on cryptocurrency? What's the big deal? What do they do that's different than cryptocurrency? So, sorry, than traditional currencies. So I'll touch upon a few of these. I'm not going to go through all of them in exhaustive detail, but let's just go through a few of them. So the first one is that there's no need for middlemen. There's no need at all for financial intermediaries. If you want, you can transfer Bitcoin, or for that matter, virtually any other cryptocurrency, to another person, another company, a store, what have you, without the need to involve a bank or Western Union or a credit card company. Nothing. All you do is, well, you need the internet, and you need a computer, or you need a smartphone. And of course, you need the recipient's wallet address, and that's it. That's all you need, and you can send them the money right away. Lower costs, in theory anyways. So there's some exception to that. So just to give you an example, Bitcoin last year, I think, because of significant demand and volume back in April, I think it was, it hit a peak of $75 to process a single transaction, which is very high. It's all based on demand and supply. But historically, transacting in Bitcoin has been, to process a single transaction in Bitcoin has been in the neighborhood of about $2. So relatively inexpensive. Because of how you use it, it can be sent anytime, anywhere, and used in virtually any country, there's really no limitations on it. You don't have to wait for the bank to open because the blockchain is always live. It operates 7 days a week, 24 hours a day. And by the same token, because of its decentralized nature and the fact that no single authority controls the cryptocurrency, third parties can't block transactions and can't freeze your account balances. There's virtually nothing anybody can do to prevent a transaction from going through. No prerequisites. You don't need to provide identification, or for that matter, any personal information to set up a Bitcoin wallet or an Ether wallet. All you need to do is download the software. And that, of course, allows you to use cryptocurrency anonymously. You never, ever have to provide your name or anything about you personally in order to use it. No transaction limits. If you want to send $10 worth of Bitcoin, that's fine. You can also send $10 million worth of Bitcoin. Secure. For most cryptocurrencies that have been out there for a while, the technology has been more or less proven as being secure. There are some caveats around that, though, which we'll get to in the next slide. But generally speaking, they're very, very secure. And unlike, for example, more traditional credit card payments, payment information can't be stolen based on the payment transaction details. So when you send somebody some Bitcoin, there's nothing in that transaction record that could be compromised or enable somebody else to get your private key, for example. And so that should be contrasted, for example, with a credit card payment, which necessarily involves the transmission of your credit card number. And they're generally speaking pretty fast. Transactions on Bitcoin, for example, can usually be verified within a few minutes. Now, of course, that's not quite as fast as, let's say, a credit card payment, but typically much faster and cheaper than, say, trying to do an international wire transfer or doing a Western Union wire transfer. Now, that being said, all is not wine and roses in the world of cryptocurrency. There are definitely disadvantages in using cryptocurrency. For one, perhaps stating the obvious, but you need the internet and you need a computer or a smartphone to actually use it, whereas that's clearly not the case with traditional currencies. You can walk into the corner store, give somebody a $20 bill, and buy your loaf of bread and milk. Another disadvantage of a lot of cryptocurrencies is their volatile value. Now, that's kind of good in some ways, particularly if you want to speculate in Bitcoin, because the more an asset value moves around, the more opportunity there is to make money basically through trading. That being said, it's definitely a disadvantage when you're talking about cryptocurrency as a method of payment. It's definitely not a good thing if the value of Bitcoin or Ether is fluctuating by 20% a week, because it makes it uncertain as to how much you're actually paying for something when you're purchasing something using that cryptocurrency. It's also not universal. There actually have been a handful of companies out there, very large companies actually, that have started accepting cryptocurrency. Amongst them, I think Microsoft for Xbox credits, Home Depot, Starbucks, all accept Bitcoin these days. But it's certainly not universal. You can't walk into your local corner store and pay for something with Bitcoin. I'm kind of running short on time here, so I'm going to try and wrap it up a little bit. Association with illicit activities. I'm sure all of you read about this and ransomware and the fact that cryptocurrencies are usually used to facilitate the payment of these ransoms. One thing I want to mention very briefly out of the remainder of this list is complexity and lack of understanding. One of the key shortfalls of most cryptocurrencies is with respect to the private key. private keys are very, very, very important when it comes to cryptocurrency. If you have a cryptocurrency wallet and you lose that private key, for all intents and purposes, you've lost all of those funds. Whatever you have in cryptocurrency, that's completely gone. It's completely and utterly unrecoverable. By some estimates, with respect to Bitcoin, they think that about 18% of all Bitcoin out there has been completely lost because the people that had that Bitcoin lost their private key. And there's been stories about this. There's some fellow that lost a private key that held something like $60 million and it was in a landfill. But stories like that abound everywhere. So that's something that's very important that you need to keep in mind. I'm going to skip the rest of this, the disadvantages, variations, applications. Let me spend 30 seconds on this one. I'm not going to go through all of these things, but all I wanted to say, core concept that I wanted to communicate was that because at its heart, cryptocurrency is nothing more than a very sophisticated, very secure digital ledger. The same technology can be used for any number of applications. Basically, anything that requires or involves accounting, record keeping, or ledgers in any way, shape, or form is something that blockchain technology can be used for. And in fact, a number of these things have already been implemented. In fact, there's a travel insurance policy in the US that actually operates on or using a blockchain technology. It's really fascinating stuff, but I won't go into a lot of detail on that. Regulation, I'll just say two things very quickly. I know I'm running well over my allotted time. Income tax, the Canada Revenue Agency has issued a paper on this or a publication. Cryptocurrencies, if you're trading in cryptocurrencies, it'll either be treated as income or capital gains, depending on how you undertake those transactions. And that's probably the key importance from an income tax, important point from an income tax perspective. The other thing I should mention very briefly, I'm not going to do it justice in 30 seconds, but issuing or creating a new cryptocurrency, if you're creating a new cryptocurrency and selling it in order to raise funds, without getting into all the detail, you will definitely attract the attention of securities regulators, because there are a number of requirements they'll impose on you if you plan on doing something like that. And with apologies for running a bit over, that's it for my presentation. Let me stop the sharing.
Okay, thank you, David. Before we move to the next speaker, for those who didn't sign in on time and missed some of the early parts of the webinar, it will be posted on the TCBA website, but you are able to ask David a few questions after our next speaker. So it'll be approximately 20 minutes before we complete the next session with Hanjin.
The presentations in this seminar or webinar are intended for educational or entertainment purposes only and do not constitute or replace independent professional advice or judgment. Participants should seek and obtain their own independent professional, legal, financial, or other professional advice before taking any action based on what is presented. Without limitation, anything presented, including all representations, expressions, statements of facts, or opinions given during the presentation are those of an individual participant making such during the presentation, and unless expressly stated by Toronto Chinese Business Association, its co-sponsors, or its committees to the contrary, are not also made by, endorsed by, or represent the opinion or position of Toronto Chinese Business Association, its co-sponsors, or its committees. Toronto Chinese Business Association does not endorse or approve the content, accuracy, and completeness of the information presented and assumes no legal or other responsibilities for same. Attendees should note that sessions are recorded and may be published in various media, including printing, audio, and video formats without further notice. By attending all or any part of the webinar or seminar, all participants and attendees give consent to such use of the recording and waive any and all right or claim for privacy related to or compensation for their attendance or appearance in the recording.
Good evening to us here in the Eastern Time Zone, and good afternoon to you in Hong Kong. I'm Gilbert Wong, third Vice President of the Toronto Chinese Business Association, co-chair of the webinar committee along with Wayne Tsang, who was not able to attend today and co-moderator for today's session. I'm here with award-winning music producer, singer, songwriter, actor, the first Chinese musician to drop music NFT, Mr. Hanjin. This session will be pre-recorded here at the TCBA headquarters in Toronto and will be broadcast at a future live stream webinar. The NFT scene has blown up in recent times and turning it into nothing short of a frenzy. Hanjin will talk about how he has converted a musical single into a non-fungible token, and we'll talk about whether other musicians should take to NFT to solve a very specific problem by closing the income gap in the Chinese music industry. I will now turn the mic over to my co-moderator and fellow TCBA director, Ms. Annie Chan. Take it away.
Hello， 係啊，我係 Annie Chan 啦，係多倫多華商會嘅會董啦。咁我哋今日好高興咧，就請到陳滿仁先生嚟到我哋呢度咧，就係即係呢個 seminar 幫我哋分享下 NFT 呢個 topic 啦。首先嚟講咧，我哋介紹一下陳滿仁先生嘅背景先啦。咁陳滿仁先生咧就係香港電影金像獎嘅獎項得獎者啦，亦都係即係中國一個歌唱選手 show 決戰好聲嘅 coach 啦。咁亦都係一個全能嘅唱作歌手喎。佢本身自己咧有個歌手，但係佢對於創作音樂咧嘅曲詞編監咧，亦都會一手包辦得到。而音樂上邊咧，亦都係得到無數嘅獎項㗎。咁而 Hanjin 自己佢亦都係第一個將 NFT 呢個 technology 嘅概念帶入 Chinese music 入邊嘅。咁而我哋相信呢度好多嘅 audience 啦，都對呢方面都有好奇同埋想知多啲呢方面嘅資訊嘅。咁麻煩Hanjin， 咁我想問下咧，你咧可唔可以分享一下你對 NFT 呢方面佢對我哋有咩好處同埋點樣去 process 咧？
大家好啊，我係陳滿仁。咁yeah, I'm really happy to be here。希望大家喺多倫多身體健康，順順利利。咁NFT 呢個樣嘢咧，我就喺舊年3月零發現嘅。咁點解突然間會中咗落去咧？因為發現 NFT 可能就係可以解答啦，我一路揾嘅出路 for 我哋Chinese musician 同埋 Chinese digital creators。咁點解咁講咧？因為一路咧見證住音樂嘅衰退啦，市場CD 嘅失敗 ，MP3 嘅失敗，streaming 對音樂人唔係歌手，音樂人嘅影響，令到好多音樂人要改行，因為交唔到租，養唔到家，咁好憤怒嘅一個問題嚟嘅。咁舊年見到 NFT 嘅又唔係真正出現 NFT 嘅熱開始熱嘅呢個趨勢咧，令到我覺得可能呢個就係可以解決呢個問題嘅一個出路，因為 NFT 可以令到俾音樂人咧一個各自私人想直接同買家溝通嘅同埋交易嘅一個途徑咯。咁 NFT 係 built on blockchain 嘅，咁喺區塊鏈上邊咧，所有嘢咧都係4大元素啦，透明啦，transmutable 即係你改變唔到佢啦，佢係即刻噶啦，好快啦，同埋佢係佢係你冇得你一發出去咧，你就冇得再改噶啦。咁呢件事咧會令到咧音樂人同埋佢哋啲用家，即係歌手又好啊，公司又好啊 ，fans 又好啊，大家就可以好有信心知道，呢個係佢呢個音樂人出嘅歌咯。 咁呢個音樂人咧就可以直接咧唔需要經過第三者咧，取求成本啊，或者取求抽佣啊，嚟用音樂嚟謀生。咁呢樣嘢係好呢個概念好吸引。咁因為佢可以幫到嗰啲養唔到家交唔到租嘅人，可以 keep 住做音樂養到家交到租，等出頭日keep 住做音樂，令到音樂呢個市場咧唔會被 Web2 抹殺，而音樂喺2030年以後咧會 keep 住有新嘅華語音樂咯。因為如果你冇音樂人活躍嘅話，咁你就唔會有新音樂，你依然會有舊音樂噶嘛。但係可能2050年咧，依然喺聽緊王力宏、周杰倫、鄧麗君嘅時候，咁會有少少 sad 咯，係啦。咁呢個就係我對點解會想做 NFT。咁點解我會做 NFT 做得咁激烈咧？就係因為好多人都唔夠膽做 NFT，因為 NFT 你係需要作者咧自己註冊電腦錢包，跟住要註冊NFT 平台，或者要識得自己做 coding 去launch 佢嘅 NFT as a smart contract。咁你已經有幾重難度啦。咁你最尾仲有一重難度，佢嘅用家、佢嘅買家都要有電腦錢包，亦都要識得上交易平台去買賣 NFT。咁我就發現，咦，咁多啲人，既然有咁多難度咧，我梗係最好就係我做啲示範啦。所以我到而家做嘅3個 NFT drops 咧，全部都係示範嚟嘅。第一個示範咧就係只係一隻歌，咁只得一份，只會一個買家，跟住就賣到7個 ETH，咁就代表咧喺以太坊係喺 OpenSea 係可以做到呢件事嘅。音樂人可以以一隻歌嘅模式去做呢件事。咁跟住之後我就幫好多人做啦，但係為咗解決跟住為咗解決下一 lot 嘅問題咧，我就 second drop 我就喺最平個鏈度做嘅，就係幣安鏈。咁幣安鏈咧亦都幫啲音樂人啊或者藝術人啊去解決驚做 auction 同埋想多啲人收到，唔止係一個人可以買到貨嘅問題啦。咁就出咗77隻短歌，咁咪喺幣安度7個幣安幣一粒，總共賣咗539個幣安幣啦。咁呢個就幾轟動嘅，可能因為嗰陣時幣安鏈出 NFT 咧仲係好新啦。咁我係好早期出㗎啦，咁所以就1分鐘之內已經搶晒啦。咁之後咧，因為2個原因，一我啲 fans 群因為1分鐘之內佢哋搶唔到啊，所以佢哋話我就諗住幫佢哋整一個為佢哋度身訂造嘅咁NFT 系列。咁嗰陣時已經開始興啊，即係6月後已經開始興 PFP collection 㗎啦，即係畫像 I don't know collection 嘅 NFT， 好似 Bored Apes 啊，或者 CryptoPunks 啊、Cool Cats 啊、Cybercons 嗰陣時係呢幾個 IP 啦。咁我就諗住出一個 collection 嚟示範俾音樂人睇。就算你唔識 coding， 你都可以畫幾幅畫或者幾百幅畫，跟住咧用自己嘅私人社交平台或者社交通道去等你嘅受眾群可以陪你一齊玩一個 NFT 系列咯。咁我就賣咗48粒倉鼠俾我嘅我一個私底下嘅私人嘅Telegram 群組嘅。咁呢個就證實咗，其實係可行嘅。咁最尾就舊年年尾我就喺香港數碼港，即係香港嘅 Silicon Valley 啦，嗰度起咗一個加速器。咁喺度就諗住幫音樂人又好啊，藝術人又好，總之個人嘅工作者加埋啲喺 Web2 或者喺現實世界咧 struggle 緊嘅一啲公司咯，因為 NFT 咧係可以幫到揾唔到錢、交唔到租、養唔到家嘅人，有個新方法可以揾到嘅。咁我嘅個 idea 嘅基本就係 you have nothing to lose， 因為反正喺 Web 2咧已經 suffer 緊嘅話，咁不如試下啲新嘢啦。反正你都已經做開嗰件事，即係譬如如果有間公司係賣大閘蟹嘅，咁賣開大閘蟹，可能或者 OK 呢個太遠啦。有間公司咧係做 iOS game 嘅，即係 game for 電話嘅。咁咧而家少啲人玩電話 game 啦。咁咧我就有能力，因為我識得出 NFT， 我識得做 generation， 我識得做minting debt， 咁咪幫佢哋，同埋我識得砌 campaign， 同埋砌 marketing。咁我透過呢個加速器，咪幫佢哋launch NFT 嘅 collection， 等佢哋可以增加佢嘅hardcore 消費群咯。咁呢啲人因為佢哋好中意打佢嘅 game， 佢哋肯俾多啲錢去攞到多啲着數喺個 game 度。咁你只需要肯俾佢哋，佢哋就會同你有連接啦嘛，連接上啦嘛。咁呢個就係我喺數碼港做嗰個家族期嘅主要目標咯，幫到多啲人。咁今年咧就會而家就傾緊幾個 venture building 嘅 project， 不單止係數碼港喺出邊都有。咁希望可以用區塊鏈同埋 NFT 嚟幫到越嚟越多人咯。
係啊，我又知道陳滿仁先生咧，即係好鼓勵啲新進嘅或者 independent 嘅音樂人咧，就去用 NFT， 就instead of 用即係去啲傳統嘅唱片公司啊嗰啲方式去做啦嚇。咁即係你可唔可以講下點解會NFT 即係 for 佢哋 advantage 啲咧，即係好啲咧
？NFT 唔係一個 advantage，NFT 係一個可能性。咁如果有人話 NFT 一定會可以幫到你嘅音樂做得好啲咧，呢個人講緊大話。冇人知 NFT 會唔會卒之變成一件好事壞事。但係 NFT 嘅可能性係高過keep 住喺 Web 2嘅模式去做音樂咯。for 音樂人唔係歌手，係音樂人。歌手咧係明星，明星咧可以剪彩、拍電視劇、拍電影嚟做收入。音樂人咧只可以靠音樂，而咧歌手咧係用音樂人嘅幫佢哋做嘅音樂咧嚟紅，跟住去做明星，跟住去賺明星嘅收入。明星係冇問題嘅，明星依然揾到錢嘅，音樂人揾唔到錢。咁我想幫嘅係音樂人。同時間有好多畫畫嘅人喺電腦畫，佢哋幫品牌或者亦都會好多畫畫嘅人幫歌手畫嘢，但係卒之咧歌手越少出唱片，畫嘢嘅人做唱片嘅人就越少收入，拍 MV 嘅人都一樣。咁 instead of 喺 Web 2嗰個模式咧喺度受苦，揾唔到錢，養唔到家，交唔到租，不如試下一個新嘅模式啦。呢個新嘅模式可能咧會勁過舊個模式。但係個關鍵係 you have nothing to lose。而blockchain is here to stay。咁既然 blockchain is here to stay， 即係 NFT 都有好大機會 is here to stay。咁而家就早啲入嚟插旗，明白成個遊戲規則，就好似好多藝術人或者正常人都會信㗎，即係話哎呀，如果我係2005年開始玩 Facebook， 我同埋 YouTube 同埋 IG， 我而家咪就係大紅 KOL 啦，我咪可以我而家嘅生意咪做得好啲咯，咪係呢啲晦氣説話咯。如果你而家入嚟做 NFT 嘅話，你分分鐘咧之後咧你就係下一代嘅，你唔需要再信咯，10年後。係啊，你唔需要再信啊？點解當年咧我冇開 MetaMask 啊？我冇出 NFT 作品啊？係啦，咁樣嘅一個argument 咯。
咁譬如你會即係賣嘅 NFT 都係我哋買啦，咁我哋嘅角色係乜嘢啫？我哋亦都幫到你嗰方面係即係有咩幫助即係咁樣，即係嗰啲即係你哋。
嗱，作為一個買家咧，買 NFT 咧，要小心，因為當一個 NFT 冇乜人搶嘅時，NFT 好成日 hot 嘅 NFT 成日會有 scam 嘅，即係一個真嘅會諗住10個假嘅，跟住咧，如果你去咗假嘅 website 啦，跟住你去喺嗰度買咧，你就會跌錢噶啦。咁但係相反 is true。如果咧一個 project 咧係冇 scam 嘅話咧，呢個 project 佢嘅升值可能性咧，可能亦都好可能低好多嘅。所以如果買家係諗住可以做炒作嘅動作嘅話咧 ，NFT 係危險嘅，因為 NFT regulated 同埋 illiquid 嘅一個 space 嚟嘅。而買家咧應該買 NFT 因為佢中意。佢應該買 NFT，因為佢覺得3年後或者5年後呢件事會對佢好有價值，同埋佢要相信佢要相信佢買嘅嘢咧係會令到佢開心嘅。如果佢純粹係為咗賺錢嘅，我就勸佢三思而後行。
OK，
好似買藝術品咁樣，因為你唔知道藝術品咧好多時候咧就係而家某某價。你買咗之後咧，1年後佢跌到一半都冇，但係可能5年後咧，佢就係5倍、10倍。呢個可能性呢個 scenario 成日發生嘅。如果個 product 係好嘅，如果個 artist 係好嘅，如果個公司係好，呢個效應咧喺finance界後 ，it's called the J curve effect。當一件事好嘅時候，佢會有一個熱潮，跟住佢會跌落去。跟住啲人會唔理佢一陣，跟住先會慢慢再升翻咁樣咯。
即係 so far 嚟講，即係 NFT 其實好多時候都聽到係 apply 落去即係藝術方面嘅嘢多啲啦，係咪啊？
我哋時間唔多，我盡量講得精準啲。NFT 唔一定係藝術，只係 NFT 嘅暫時嘅性質。同藝術最相似。NFT 嘅性質會不斷轉變，而陳奐仁覺得 NFT 最幫到人嘅性質咧係做 financing，幫想長大嘅藝術或者正常任何公司，總之喺網絡嘅公司係會第一者受到幫助嘅。但係如果你係IRL 嘅公司，即係 in real life 嘅公司，即係譬如買大閘蟹啦，或者你係買珍珠奶茶，或者你係做 drop shipping 嘅，你都可以你只要係有一個 business model 係運作緊嘅，你都可以出 NFT collection 嚟幫助你嗰個 business model 㗎。咁呢樣嘢咧就可以呢個動作咧就可以幫助下一代嘅生意人或者今代嘅生意人咧可以拉高貧窮線咯，即係拉高佢哋嘅最低收入啊。呢樣嘢係緊要過收窄貧富懸殊，因為有錢人咧你阻止唔到佢賺多啲錢㗎，佢只會越嚟越有錢，因為capitalization。但係我想幫嘅人咧，我希望大家會同我一齊去幫嘅人，就係嗰啲而家交唔到租，等佢哋可以交到租嘅好做嘢嘅生意或者個人創作者咯。
係今日多謝陳奐仁先生啦，幫咗我哋講咗呢個speech 啦，咁樣係。
Okay, Hanjin, I would like to close this session by thanking you on behalf of the entire Toronto TCBA Board of Directors and my co-chair Wayne Tang, and for sharing all the enlightening information and providing a wonderful presentation on NFT.
Thank you.
Before we end, I'd like to invite David back for a 10-15-minute Q&A session. If anyone has a question for David on the topic of cryptocurrencies, blockchain, feel free to ask away, and David will be able to answer your question. If you have a question, you can unmute yourself and ask away. I see that.
Hello.
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 Yeah, this is Alicia. Yeah, I just curious, what's the purpose of this meeting? Because I have no Bitcoin for a long time, but for this meeting, I just saw the title is about NFT. So do you have some suggestion for NFT we need to, we can invest?
Unfortunately, NFTs, that would have probably been a better question for Hanjin.
Yeah,
in terms, sorry, go ahead.
Because I think this is kind of like investment. So do you have some just like directly just as which NFT is good. Yeah.
Well, I'll give you my candid opinion, which I imagine might differ from Hanjin's a little bit. I honestly have a bit of difficulty understanding why anybody pays anything for NFTs, to be perfectly honest. I myself would never, ever invest in any way, shape, and form in any NFT. And I certainly wouldn't recommend them. Because the nature of the NFT is you have a record, like I understand what it is. It's a record on the blockchain that points to some sort of ownership interest, but it points typically to a digital good that really has no scarcity. Right? The fact that you own an NFT in a particular work of art, whether it be music, a graphic, a painting, what have you, doesn't preclude somebody else from copying that very same artwork. The only thing that you do own is a record somewhere on some blockchain that indicates that you were the owner of that record. And I guess, and I don't want to sound too negative at the same time, because clearly there has been value associated with NFTs, but I have trouble understanding why people do in fact buy NFTs, but for the possibility that somebody else in the future may be willing to pay more for that particular blockchain record that indicates some sort of ownership interest with respect to that piece of art. So my apologies. I know I'm not answering your question directly, but and I'm sure Hanjin would have a very different answer than I would. So.
Okay, thank you so much.
Anyone else have a question for David? We're fielding questions on cryptocurrencies, blockchain. And if you have any questions for David, please ask away.
I see one from Johnny So in the chat. How to open the wallet? I'm not 100% sure I fully understand the question, but if that's a question to ask, like how do you get started on cryptocurrencies? I can spend 2 minutes. It's very, very simple. You decide on a cryptocurrency. Literally, all you have to do is Google it. If you want Bitcoin, you Google Bitcoin wallet, and you'll get any number of results that will provide links to software for Bitcoin wallets. So if it's of interest, the one that I use is called BitPay, and it handles a number of different cryptocurrencies. Very, very easy to, very straightforward to download and install it whether it be on your smartphone or your computer. You run the software, walk through the steps. You'll be asked to select, I think, a password, a security password. It'll generate a private key for you, it'll generate a wallet, and you're off to the races. It's a very, very simple process to go through.
Any other
Bitcoin
questions?
wallet, yeah. So.
I don't see any other questions. Does anybody have a question for David?
Hi, David. This is Raymond. I'm one of the members of TCBA. I wanted to quickly see if you could talk about the security around Bitcoin. I know it's probably a very, very long subject or long topic, I mean, but are there any agencies in Canada, are there regulations in Canada that kind of manage that? I mean, essentially you could pay Bitcoin throughout the world, and are there things that Canada has in place to protect us a bit more in these cases?
In terms of regulatory protection, the short answer is no. I mean, there are some elements. Really, the only thing that I can think of that would apply to cryptocurrency service providers would be PIPEDA, the Personal Information and Protection of Electronic Documents Act. So there's requirements in that legislation that mandates organizations that collect and hold on to personal information to protect that personal information from exploitation, basically, from others. And there's also breach reporting requirements, so that if personal information that you submit to a service provider is compromised, then they have to publicly disclose that. That being said, that really only applies to personal information. There's no minimum safeguards or requirements with respect to the security around cryptocurrency transactions themselves. So the short answer is no. I mean, the market effectively determines what security procedures service providers put into place. Now, that being said, right, in the past, and I'm sure you've heard of these incidents, a lot of service providers have had a lot of problems, right? There have been exploitations and hacks of, well, the most significant one that comes to mind is Mt. Gox, right? They were a very early stage Bitcoin service provider that held wallets on behalf of their clients. They were hacked, and that effectively resulted in the loss of, I guess, in today's equivalent value, something in the neighborhood of $60 billion that just disappeared like that because they were hacked. But I think the industry is slowly starting to learn, because while those things have come up in the past, service providers have learned from these past experiences, and more are becoming much more secure in their administration of these services. Now, the other thing that's perhaps worth mentioning very briefly is that one of the beauties, I think, of cryptocurrency and Bitcoin and Ether and all of those things is that you don't necessarily need a service provider to actually use it. In some instances, yes, it'll make things easier. And in other instances, you actually do need them to actually, let's say, buy cryptocurrency using fiat currency, right? You need to go to an exchange to do that. But after that process is done, in order to actually perform a transaction using Bitcoin, you don't need a service provider. You can maintain your own wallet. You can maintain what's called a cold wallet, right? You write down your private key, or there's something called it's a 12-word mnemonic, but it's essentially your private key. You write it down on a piece of paper. You lock it away in a vault somewhere. You delete all your software, and your Bitcoin will be very, very secure. Nobody will be able to steal your Bitcoin without access to that key. It's only when you delegate your wallet to somebody else where it becomes an issue, so that if you delegate a wallet or use a wallet that's administered by a service provider, if they get hacked, then yeah, you could lose all your money. But yeah, sorry, I'm going on way too long about this. Short answer is no. As far as I'm aware, at least in Canada, there's definitely no regulatory requirements that mandate minimum security And as far as I know, internationally, there isn't either.
Okay, thank you. Thank you.
Okay, I see another question from Kenny Kwong. Ken Kwong, do you foresee the regulatory landscape to become much more tighter? And can you point to a specific SCRA articles pertaining to crypto and taxation?
Well, the regulatory landscape has actually become more stringent, particularly in the area of money laundering. There's a piece of legislation, I referred to it in my slides, called the Proceeds of Money Laundering and something Terrorism Act. So it's basically the money laundering legislation. And when did the regulations go into effect? The regulations, so previously, before June 1st of last year, none of those regulations applied to virtual currencies or digital currencies. So in terms of the purchase and sale of cryptocurrencies, money laundering legislation did not apply at all. And there were actually a number of service providers that used that to their full advantage, because you could, before that date, there were a few service providers where you could exchange, well, not exchange, but you could use their services to transact in cryptocurrency without the need to submit any personal information at all. But that changed on June 1st of last year because they enacted legislation. Well, it was actually enacted back in, I think, 2014 or 18, I forget which. They enacted the legislation, but it only came into force last year, which applies money laundering legislation to dealers of virtual currency. And that means that in order to use a service provider to help you transact with cryptocurrencies, that service provider, not you, the service provider, will be obligated to collect personal information from you. It'll be obligated to provide specific reports to the government on suspicious transactions and transactions above a certain dollar value. So all of that now it does now apply to cryptocurrency service providers, not individual consumers though, but rather service providers. So that's, sorry, go ahead.
Oh, no, go ahead. Sorry, I interrupted you.
Yeah, so there's that legislation that has come into effect. Securities law has definitely beefed up. The Ontario Securities, in fact, actually all the security commissions have issued guidance as to situations that they believe fall within their jurisdiction. So they regulate the offering of securities, and by and large, this won't affect day-to-day use of cryptocurrencies at all. The only time when securities regulation comes into play is if you're trying to raise money through the issuance of a cryptocurrency. So for example, if you wanted to start your own cryptocurrency as a business and issue a new coin or a new token to raise funds for a business, then you would definitely fall within the scope of securities regulation. And there hasn't actually been any changes to the legislation itself, because the legislation is already sufficiently broad enough to encompass cryptocurrencies. That being said, the security regulators have issued guidance that say these are the situations that we think are within our jurisdiction, and if you do A, B, or C without obtaining the necessary regulatory approval, you're going to get into trouble. So that's already been there. So it's already exists. With respect to CRA, yes, I actually do have a specific link. There was a guidance that they released that went into a lot of detail about how they would treat cryptocurrencies. And I mean, if I could just spend 30 seconds on that, basically, sorry, what sounds to everybody. Okay, there we go. So you'll see the link in the chat. But the short answer basically is any trading of cryptocurrency, any money you make off of cryptocurrency will be treated no differently than the trading of any other commodity. It's like if you're trading gold or silver or pork futures, it'll be treated the exact same way.
Okay, before I get to the next few questions, I want to be respectful of your time, David. Do we have time for a couple more questions?
Yeah, sure. I'm happy to.
Okay,
happy to
so
stay for
I
you.
have two here. One from Michael. I'm not sure if this is something that you can answer, because each sale of an NFT is recorded on a blockchain, most usually the Ethereum blockchain, thereby creating an indisputable and a verifiable ledger of the owner of each NFT. Is there a compliance or copyright for the transaction in Canada?
Is there copyright for the transaction?
Let me just send
For
you.
that, yeah, I think the answer to that one would probably be no. I don't think copyright would attach, at least not with respect to the record in the blockchain. Copyright could certainly attach to the the artwork to which that record is pointing. So if it's a piece of art or if it's a piece of music, then absolutely copyright would be could subsist in that particular work. But I don't think it would be able to subsist in the particular record in Ether. And again, just to be clear about this, a record holding ownership of an NFT is not the same thing as holding ownership of the copyright in a given work. Those two things are not at all the same. You can have an owner of the copyright of the work, and that doesn't necessarily need to be the same as the holder of the NFT that points to a given work.
Okay, we have a final question from our president, TCBA President Teresa Chi. Can I get the refund on blockchain when I find something wrong on the transaction?
Short answer is absolutely not. Bitcoin transactions are final. The only way that you can cancel or get a refund is, I should qualify it a little bit. The only way you can get a refund is if the vendor in question willingly sends you back the money. If you dispute a transaction or you dispute a purchase, then there's no technological way to recover that money. Now, that being said, because I'm a lawyer, I also have to address this aspect of it. There's no technological way to recover the funds, but there's also still legal recourse, assuming you know the person and can identify them, the person with whom you entered into the transaction. Then you have the same legal recourse as you do with any other transaction. You can certainly take them to court. You can sue them and say this was an invalid transaction, or this was fraud, or whatever basis on which you want to challenge the transaction. You can take them to court and either get a money settlement from them or decision against them.
Okay, with that, I want to end here by thanking our two speakers, David and Hanjin, for speaking so powerfully on cryptocurrencies and NFT in the music industry. Thank you, David, and thank you, Hanjin. On behalf of the webinar co-chair, Wayne Tsang, and the TCBA Board of Directors, I want to wish you all a pleasant evening and stay safe, and I look forward to welcoming you back for a future session.
Thanks for the opportunity, Gilbert. Appreciate it.
Thank you, David.
Bye, everybody.